Peace and blessings, everybody. Welcome to Sauce Factory Wednesdays. Today, we're going to be going over setups, execution, reading the trend on a higher time frames, using that momentum to best effectively enter the trade in the true trend direction. All right. So right now, we currently on CL crude oil futures chart, and we're going to be looking at the market in its totality, and then want to go down to lower time frames, look for I said setups. From there, we're gonna take our trades like that, and we're gonna go. So first thing first, as you see, we have the oscillators. We're looking at what side the market oscillators on. Major key, right? And if anybody have any questions at any time, feel free to unmute and ask them, or you want to go anything. Let's talk about it. Let's get this conversation going, right? First thing first, I'll know where your oscillator is located at, right? So let's blow up the RSI. The RSI is in bullish territory, right? Is above the 50, which is the neutral zone. That's why we got this white line here. You can adjust these colors by going in your settings, right? But it's above the 50. That means it's in the bullish side of the territory of the market. Go to the MACD. It's above the zero level, right? Meaning it's on the bull side of the market. Technically, we're going to be looking at a nice, strong up push. But what I want to do is go down to the 1 hour, and I'm just checking to see what the market is currently at, right? All right, cool. We still in bullish territory, but we see we got a crossover to the downside, and you see things are running. Boom, 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 boom. Right there, running down. Okay. So when you see them running down like this, then we know, like, hey, we are coming bearish, is doing a retracement, right? So I'm looking at that thing first thing in the morning, right? I'm gonna drop down to my 12-minute chart. You can use a 15, whichever one you like or your preference is. And then once you start coming into the market, you want to see, like, hey, what is price doing? Let's start. Like, typically, I'm looking at the market 7 a.m., 8 a.m., right? You know, the New York opens at 9:30. The crude market opens at 9 a.m., right? So it opens 30 minutes before, but you will get a secondary push when the 9:30 market opens up in New York. Now you see price action a little weak here. We are still on the bull side, but we just came out of a nice retracement there, right? So you still just paying attention to your oscillators. But when we get down here, it's one crucial thing I'm looking for is certain, setups in market structure. I'm looking for a certain chain of events to happen. So I'm put away my my oscillators. Let me back out to a 1 hour chart. And I'm just looking. I see price did what overnight. This happens during the London, right? Do. So we have a high put in. Boom. Okay, you see them with that high. Now we're gonna go to some lows, right? You see price dip right here. And then you have price taking out this low. I get a breaker structure there. So what we have here is a couple of breaker structures, right? That's what happened. This year, Tuesday range to the Asian, to the London, right? This was around here is your London market. Price broke down. Boom, then pulled back up. So you got a break in market structure. Now I'm gonna drop down to a 12-minute chart to show you the break in the range. Then once again, we have another break in the range. Okay. So see how they broke down and did a break a market structure. Key component into recognizing what's about to happen next. Every time they do a break in structure, they like to make a retracement, right? Rebalance price and then make another push down. So after it came out of this range, even though it's drifting down, what you want to do is, and this is part of key setups, these are the simple steps to take. From the moment it breaks down, go to the pivot point from the last high to the low here, right? See, price made a 61% retracement. Once price made that 60% retracement, okay, great. You can enter your trade. Check your stop loss. You'll say anywhere in this range. You want to put your stop loss on market structure, but if you can, you You want to put it at an engulfing candle. That's cool. If that's you cannot afford to trade, drop down to a micros, lower your leverage so you can properly take the trade. Proper risk management is going up to the 100% mark. That's market structure. Then you're gonna want to target your negative 27 level. You know how to use those, or your negative 61. But a low is a primary quick target because price will sweep that low. All right. But mind you, on the higher time frames at that moment, we was just coming down on the higher time frame. So we look at this setup. Let's go ahead and put a vertical line here, right? And we're going to put another one right here. And I want to show you what happens when looking at your oscillators on a higher time frame. So we're going to back out, go back over to the setup. You see the MACD crossed over here. It's crossed over to let you know, like, hey, we got a bearish crossover right here on the MACD. Okay. From there, price starts slowly drifting down. Now, once again, this was a pullback because you're still in a bullish market, right? But it's just a pullback. So if you're trading with the MACD, you know you cannot overstay your welcome. So you're still counter trend trading according to your oscillators to say counter trend. Okay. So dropping down to the 12-minute chart, looking at the market, you'll say, hey, on here, we are below the zero level. But why did it bounce so aggressively? Right? Because higher time frames, you are bullish. And actually set up a divergence right here on the RSI. If you look at it from here to here, right? Price, when it bounced back up, when it came back down, it stopped at your 33%. Well, your 33 on your RSI, right? That's where it stopped at before it pivoted and kept going. So these are little keys you pay attention to. Now look at your MACD, right? Even though it dipped down, but you see how it sharply turned up right here? This get a lot of people in trouble because they're not paying attention to these key things. The little simple factors, right? Boom. Look at the momentum in your MACD. This was the initial push. This was the secondary push. Huh. You don't have the same volume. You ain't having the same energy that it had here. If it was going to really make an aggressive push, you need these histograms to be way down here, right? You want to see those histograms like, boom. I don't need them to be down here equal to this low here, right? Or greater than. It need to be here, at least here, or greater than for you to actually have a strong push to the downside. But you see, that was your divergence right there too as well. So you want to pay attention to those, especially when you swing trading or throughout the night or the day. So that's how you want to swing a position overnight. You want to pay attention to that to make sure you are in the correct trend. If not, it can go bad quickly. So as long as you have a stop loss in place, you should be fine. You using any trading platforms, auto break even, also be fine. Take your risk off the table. So let's clean it up real quick. Do. All right, cool. So once price took the low, get rid of that. Guess what price did? That's when it made its reversal, right? Boom. Price make the low and it started running for highs because now for them to go down, they got to get buddies. They got to get some money. They have to do a market sweep. They had to sweep the liquidity, right? This was the highest point of yesterday's price. Well, guess what? They took it here. Okay, great. We got that. We got everybody in. Boom. So from there, they decide to sweep. Okay, we got our broom. Y'all know me. They sweeped it. Then they dumped it. Right? But you got to notice using the rest of your technical analysis, right? You got to see that fair value gap right there. That's what they target. So once they dumped it back down here, people bought it up because they read that chart. They said, hey, they done a liquidity sweep. We good to go. We can bounce it and take the highs. So once again, they ran highs again. Boom. right? Let the break a structure. From there, guess what? Clone, sweep liquidity, right? SOS, same thing. Drop down, sweep. Anytime they take a high, they're gonna drop down. Then they're gonna go rebalance price, right? Real simple thing. You can say, hey, from this pivot point to the high. We'll change these fibs real quick, make them easy to see. All right, so when they pull back down, look where they came. They made a 60% retracement. All right, a 60% retracement, bounced at the fair value gap, ran to take the highs again. Now, this time, when they took those said highs, they kept dumping and they ran the lows, right? So you woke up the next day, guess what? They took their low out. Boom. Easy money, right? This what happened midday. But what set this all up, well, now we can go down to the lower time frame. Let's go right over here. That 805 candle. So it was actually on the trading floor today. And one of the members like to trade crude oil, and I was going over these technicals with them. So simple. Came to the chart. This is my trading time, but it's low volume, so I try not to trade during low volume. It was a bank holiday, also Juneteenth, right? So once again, you had a breaker structure. That was a fair value gap, but this is an order block. You see the 3 candlestick order block, right? So it's an order block on the 5-minute chart, fair value gap on the 12-minute chart. So you always keep that in mind. Breaker structure. Oh, price retraced. %61%. Then price came back down, right? But once again, you got to ask yourself, but what happened? Price decided to run up higher, right? So this side market shift. Okay, let me get in the chart to blow that up some because I know y'all want to see that. Market structure shift, right? That was breaking down. They took a low, but what happened? Looking at the oscillators, remember on the higher time frame, we are still what? Bullish, right? So we want to add a V here and we're going to add a V here. Like I told you, on a 5-minute chart, you just came back down. You bounced off your zero level of the MACD. The RSI was down here, but it's hiking up, right? So your RSI is doing this number. Grab a trend line. Your MACD histograms is doing this number. As price coming down, once again, dog, try to tell you, watch what the price doing. Your MACD histograms is pulling up. You're in bullish territory. Anytime you're trading down on a reversal, you want to see a lot of volume in your histograms here, right? That's letting you know people are actually pushing it down and strong momentum to the bear side in the favor of your downside trend. So you would took that trade here. You got to use great risk management to see, like, maybe you'll get that push to the to take out the low. Maybe you'll get that push to take out, your 27%, take out more than that, but not in all cases, right? But once again, this is an order block. This was the retest. They tested again right here on this pivot candle, as you see, right? Came right up in there. Then they bounced it because they knew people was going to pick up orders, because people picked up orders here before. People are going to spin a block and pick up orders here again. But what they may do is flip it right before it gets to the previous low, because somebody else going to say, hey, we want to have orders sitting here so we can get the best price possible, because everybody wants to turn on a dime price. Nobody want to see draw down whatsoever. I promise you, you don't, right? So what they did, they took it, boom, ran the highs, because they also know people who went short here, stop losses are sitting up there, right? If you're going to trade it, where should you go short at? If you went short here, where your stop loss should go? Up here. So let's just show as a good example. Boom. So you're trying to get second. You're trying to get all of this. Stop loss here, right? That's your entry. Look what they did. Just a little bit above your stop loss onto this high. They dumped you. They dumped you on your head. They swept your liquidity, right? Let me go ahead and put that broom next to you. They sweeping you up, right? But that's what they do. Well, market structure shift. After they take a low, market structure shift, run up, take a high, sweep some liquidity. If it was a run, they would have run a little bit harder, right? But they didn't. It's just a sweep. So they kind of bounced around, took a couple of stops out because somebody may say, hey, I got my stop loss 6 ticks, 8 ticks. You would have been crazy, put it 10, 20 above the previous high. Yeah, you would have been safe. But you just went with a modest 20 tick stop loss, right? They would have got you. For this trade, that was reasonable because you're going to say, hey, what's my risk? What's my reward? 45 ticks, great, right? That's a great trade. You're risking 20 to make 45. That's cool beans, right? You just double, triple that trade. But this is what they're going to do. They're going to run a stop, knock you out, and then they're going to drop the market. Once they got everybody into the play, they're going to drop it because you got to close that position. In the futures market, if you bought, you must sell. If you sell, you must buy, right? So they're going to get you to liquidate your position, and then they got the money they need, the capital they need to run the market down. And as you see, what did they do, right? After they got you out of the game, boom, kick rocks, right? Then what they do? They ran the low. Boom, boom, boom. Ran low. BOS, breaker structure, right? All day, every day. If you was patient, you would have caught this play. Now, look at your MACD. Boom, right here. That's your crossover, right? Letting you know. RSI already kind of let you know what time it was. It's already started dipping. Once it went below this neutral zone, oh yeah, you was on the cracking. That was 5-minute chart too. It was running full steams ahead because the RSI in your stochastic is faster than your MACD. So these things gonna read that and they're gonna hurry up and get there faster. So you can always know, like, okay, cool, now follow your price action. If you didn't know or you didn't feel comfortable taking this trade, you could have took it at this point here because we all know what this 3 candlestick pattern does, right? That's a 3 candlestick order block continuation. So you don't want to time the high. You could have said, hey, next candle open up. It ain't got that same momentum, that same energy. You could have took that, right? Lower your risk management. And if you take in trades at the high, you can get an aggressive, uh, these kind of aggressive entries, but you can lower your risk down, right? Because you can say, hey, you shouldn't go past this, or my stop loss top of here, that's 12 ticks. And you know for sure this a low, so you can now risk 12 or 40. That's a great risk to reward ratio, right? Or you can say, well, maybe they're gonna go for this low down here, which is Wednesday low. They may target that, and you can just kind of say, hey, this is my 1 and 10. I'm just gonna let that run. It's totally up to you. Use your risk management, use your own discernment to say where you actually gonna go. But mind you, you still need confluence from your higher time frame. So let's back out to a 12-minute chart. And we're gonna look. Now, as you see, you didn't really get into the bearish territory to over here, right? And we're gonna slide this horizontal line over here. Now let's back out to a 1-hour chart. Let's see how that affected it. Boom. So we have a crossover, but we're still in bullish territory. So we can still have some trouble, right? We can still see some, some little turbulence if they don't get this below the 0 level. Now, currently they are bouncing. It is what it is. They're going to try to rebalance some price. Get that, go ahead and get that clean. Leave that up. So you just gotta ask yourself what they're gonna do next, right? Well, we can speculate. Simply draw a fib, run it to the lowest point. Okay, cool. So from here, this is their lowest point of price. They rejected the 38, the 28, the holding. So we can probably say, hey, they're gonna reject here. Or will they make a whole 61% retracement, 50% retracement, and try to reclaim price there? So I want to go inside the candle and say, what can we possibly hit? Now, once again, we have another 3 candlestick order block. Boom, boom, boom. See, they rejected at once, came back, weak, weak. So, problem is, we don't have a new low, right? Look like we got a shift in market structure. So that means they're gonna want to look like they want to run it up a little bit higher, which is fine. They can do that. Here, but you followed it, right? Price went down, boom, boom, made a new low because it took this low out. That was a small low. Bounced back up, didn't retake a high, so still following market structure. But as you see, pivot, pivot, boom. So we're looking for a price to do that, right? We still got solid market structure going on here because this was the last swing high, swing low, swing high, mini swing low, swing high, swing low, swing high. If they can drop it here, but I do not like how the fact that they did not take this low right here. I would like for them to take that low out, and that would have gave me more, you know, comfort to see like, okay, cool. But if not, that's why we got risk management. We're only risking a little bit to take these boys down. Okay, that's enough for crude oil. So let's go ahead and slide over. Let's go to the EQ. But let me go back. Anybody had any questions about this? I know that was a lot.
Only question I had was on the order block continuation. I think you were on a
Yes.
lower time frame.
On the lower time frame?
Yeah, it didn't look the same. Let me see.
On what time frame you looking at?
There it is. So on the 6 minute, the one
Yeah.
until you
So this is
not
so
that
this
one, but the
that
one above.
uh up here.
What? Why is that a 3 continuation? Looks different than what I normally see.
Oh, well, cause still a doji, right? Because according to the book iron, sometimes they ain't gonna be perfect, right? It's really not an official order block until it get retested like this one did. So it's a potential order block,
Mhm.
but unless it get retested, it may not hold up. Truthfully speaking.
I kind of almost heard that order blocks have to be followed by a fair value gap in order for it to be like valid. So then that one did have a fair value gap afterwards, right? So couldn't it still, just because it didn't retest it, does that invalidate it, I guess?
Well, that's the whole thing, right? All that is subjective. So unless some price come up in here and let us know that they're gonna reject, we don't know that because they can actually blow through this still to this day, right? They can go blow through any block, any gap, any of them get blown through. So unless it get retested and it holds true, it's subjective. So you want to just you'll take your trade, but you don't put your life on the line for the trade because it can still fail, right? Like anything else. So you'll still plot it out, watch it. If price reject, great. If not, okay, cool. Tight stop loss. You don't lose too much money. That makes sense.
Yeah, I was looking at it from a entry standpoint, just going down, not
Yeah.
waiting for it to
Oh,
retest.
so what your entry wise, as soon as they take, I know in the book, they'll give you like the close of this body close right here. So once the price goes past that, you'll shoot for the entry. But if price take out the wick, that also a safer entry because your stop loss is the top of the candle. So when you short it, you'll be like this. Your stop loss should be here because if price come back into that zone, they supposed to reject anywhere in here. Your stop loss always go above there.
Okay.
That's how I like to play those. They're great for scalping in high volatility. So if price is shooting off, you see one of these come in, then you like catch a high volume move. I take it for a quick scalp. Look for a 1 to 3 trade or 1 to 2, 1 to 2 to 1 to 3. Quickly adjust your stop loss fast as possible. Once you get a nice amount of profits that satisfy you on the table, put your stop loss in profit because it will reverse back, right? Price will like to reverse back. Now, this is a 6 minute chart. Let's see what happened on the 1 minute, because that's what happened on the that's what happened on the 6 minute and a higher time frame. Well, let's go see what it did on the lower time frame, because sometimes they'll retest that zone, right? And you'll see what I mean. So as you see, price rocketed right there, but it kind of skipped back because see, you had a little micro one right here. It's not, I wouldn't really consider this one. It's kind of a little janky, but they definitely came back to rebalance this little zone here. Now, a great thing about this is you got a little volume imbalance, a little tiny little gap there, right? These are like little janky little things the chart like to do, right? So little skips, when a price skip like this, you see how this candle that's perfectly filled this candle? They got to do it. Even here is still an imbalance. They got to fill this void. This candle opened right below this one. They had to bring this one back up. That's what the calculation that algos like to do. They don't like things out of place. They got OCD on the real. So when you notice like little voids like that in price action, candles will come back and fill those zones. So those are the second chance opportunities. Or sometimes when you enter that trade, you say, hey, I got a draw. I'm in drawdown after it took off running, because you got to think about it. If you enter there, you seen like one red tick, maybe two, depends on how slow you was or fast you was in taking the entry. You had limit order waiting. Well, you didn't really see much of a drawdown. But let's say you kind of hesitated and you got down here, you could have been down 2, 3 ticks. You know, you never know, right? But it's such a small thing because they're going to bring price back. So you look, initial trade, they say you took the entry, boom. They showed you 5 ticks, 6 ticks, right? Then they pulled it all the way back, 1 negative tick. But remember, your stop loss still there, so you kind of cool, right? Well, it's a little bit higher. But then they dumped it. Well, sometimes that shake people out of trades, right? When I'm taking like quick reversal trades, I'm like, okay, I see about 7, 8 ticks. I'm like, okay, cool. Crude oil normally like just keep going at that moment. It's safe to like move your stop loss in a profit. But sometimes it will come back. Candles like this will hit you and it'll stop you out, and then it make the larger move after the fact. But that'll be up to you to say, hey, don't want to continue taking this trade, or I just want to let it go and look for a new setup, right? This can be frustrating to get a break even right before the major dump. One rule I put in place is I would set a timer for 20 minutes. I must let price work his way out for about like 20 minutes. And from there, then I can move my stop loss. So it depends on if I take it on 12 minutes for sure. I got to get a price 30 to 36 minutes of price action playing out for me to move my stop loss. If it doesn't, if that alarm don't go off, I do not move the stop loss. So either I'm going to take a L or a price going to be somewhere where I can move my stop loss, and it is what it is. There you go. You have the question. Oh, yeah, right. All right, bet.
Yes, sir. Good.
All right, cool beans. We're gonna go over NQ real quick, and then that'll be that. Now I shut it down. Having question, go, chop it up. It's the weather looking nice. Time to carry the boat. Do. All right. NQ. Where were we at? Oh yeah, we was over here yesterday. Yeah, that was Tuesday right there. So this a trade that was going on about. We was debating this, right? Me and some other people. This is exactly what happened. We had one guy in from up here trading it down. Boom, price took that low out, right? This low got still Monday low, right? Well, Monday mid range low. Monday kind of went way the heck down here, right? So this your high range. Oh, oh. Let's do this. Boom. Okay, great. So all the range did was this, right? Breakdown. This was the little slight pullback. They got your breaker structure there, right? They broke it, bounced it back up. Market structure shift. Ran the highs, right? So by the time you woke up, this the London market. It dipped. So this is the pump and dump, right? So they pump price up all night long. I mean, all night. They pump price, right? After they got done pumping price, boom. What did they do? This is your Tuesday 5 a.m. high. EOS. Uh-oh. Ain't it? Get out of there. Okay. That's your high of your 5 a.m. Right? First thing they do, New York roll around. They drop it. All right. They dumped it down. Then they did a quick pop, taking out the high, right? Where my broom at? Bing. Yeah. Sweep mode. Swept liquidity because they know people went short there. So it's a quick little fake out. So they did a quick pump. I think we had some news that day too. So all they did was sweep the high, then ran the lows. Right. Got a little internal breaker structure right there. Then they ran for the external breaker structure. Boom. Now, by the time they got there, people still trading it down. Nobody expected this to happen. Most people didn't pay attention to this fair value gap right here. So they totally missed that. And when you got pegged to your one trend, right? Because you gotta look at it. What was price doing? Looking at the oscillators, right? Price start curling right here at this moment, right? But let's go up to a higher time frame and see what really happened. Go to a 1 hour chart real quick. Price was always in a bullish setup. It was never bearish. This nothing but a retracement. Price must retrace. At some point in time, price was retracing. That's it. So the people who was saying I'm a bear for the day, they got smoked and they got put on a mantle. Somebody pick them up and says bear season. We're gonna go on ahead and do what we gotta do, right? But let's go down to the 3-minute chart and let's see how great this played out. But the thing too, people forget about when you having that happen, look at all those internal breaks, right? I can legit just do this the whole entire way. Boom. It did the same thing, like I tell you all day long, right? Same SOS. All it did, breakdown, pullback, breakdown, pullback, breakdown, pullback, then pump. From there, once it pumped, technical level was a little small pullback, or you can even go to this level here, right? That's your market structure shift right there. Price readjusted itself and say, let me fix my shirt. And we run it. If you want to change your trend line over there, it doesn't matter. That was a heavier dump right here, but it still was a change. They shifted market structure to say, hey, we're going to go back to the upside because they discounted price enough. From there, once they was done discounted price, they was ready to go back up. Now, you want to see like what you mean they discounted price? Simply go back up to a 1 hour chart, scroll back, and you'll see for yourself. We can say from this pivot point here, I'm gonna run our fib to the high. Where they go? 38%. Nvidia being bought up left and right. They are not leaving that thing alone. They took number one spot. They knocked Microsoft out the top. They knocked Apple out of the top seat in the S&P 500. This thing is going crazy. Of course, NQ gonna keep going up. They needed to sell off a little bit. People had to liquidate their Apple position because they had to buy more Nvidia because of that move there, right? It is what it is. But they made a 38% retracement. If you get rid of all other technicals, you only want to use fibs. If you're having a hard time recognizing fair value gaps, order blocks, any of that, a simple fib from this low to this high would have told you the whole story. The moment they got to this 38%, right? You go back down to your intraday charts. The moment they got there and this candle came in and they was not coming back to this low, you know what time it was. Bear market is over. It had enough. Read your oscillators. Make great decisions. Do not get overcommitted to one side because things can change abruptly. So that's my message for the day. That's it.